Okay, very good morning, guys. Welcome to the briefing for Thursday and the 1st of December, start of a new month. I have William Delucy sat with me, obviously Amplify's MD and co-founder, and he's going to join me on the briefing this morning because obviously I want to talk over exactly what happened with OPEC yesterday and how prices moved with oil, and then Will's going to talk about some of the other assets that he was looking at yesterday. Outside the realm of the volatility that was seen in crude oil, because obviously there was movement across asset yesterday. But starting off then with OPEC and what exactly happened yesterday. And actually we were here quite late and we were continuing to see oil move higher and higher really as we went through late into the evening. And to the top, this was a move of in excess of 10%. I wouldn't say that's the biggest move I've ever seen in oil in my years of covering it, but certainly that's a decent move to the upside in comparison to some of the recent price activity that we've had. One thing is from a news perspective, obviously you had me on the supplementing the Squawk with add-on kind of rumours and journalist tweets that I was trying to capture ahead of time, so you can really see the importance of having a bit of a time advantage, even if it's just a matter of a couple of seconds. If you're executing, you could have seen yesterday, very early on, price was already moving. This is kind of a great thing to live through for the new guys, because this was completely the normal, I'd say, behavioural pattern of how these OPEC events tend to unfold, i.e., even though their press conference wasn't until 3 o'clock, that in itself didn't start until much later. But the comments start coming in from kind of the doorstep welcomes to the meeting itself in Vienna at the headquarters of OPEC. Then they start leaking messages to the press. So the trade is on really right from the get-go. And you can see from 6:30, so pre-7 o'clock, we were already moving. And actually, the most aggressive move of the entire day, if you're looking at it on a time frame, came very early on. This was when, if you remember rightly, you had Iran, Iraq being quite optimistic that a deal would be done. And if you remember rightly, that was so positive for prices because they were the two countries which were ultimately causing a lot of headache, because the two teaming up in terms of production values is getting ever closer to being at a level which can really get up there with the likes of Saudi Arabia, who have been so dominant and had a monopoly of power, let's say, within OPEC. Then obviously there was a couple of noises about Russia as well, who we thought were going to freeze, but instead they started intimating towards we wanted to wait to see what OPEC would do, but we were looking at potential cut, which obviously started to materialize. So in a headline reading, let me just move over because my screen, this was the OPEC press release that came out after the official press conference, but this table kind of shows you better on how exactly and who exactly where the cuts are coming from. As to be expected, much of the heavy lifting done by Saudi Arabia, a cut of just shy of 500,000. You can see, like, when we start getting down to the likes of Gabon, they're making an adjustment, they're cutting by 9,000. So again, when you're trying to decipher the impact of news and you're understanding who says what and will that affect the underlying price of oil just day to day when you're trading that asset, obviously Gabon is not going to influence prices. So you can pretty much disregard anything that they say. I mean, that's taking it to an extreme. Obviously, you've got to put everything in context. But what you can see quite clearly here is that UAE, Kuwait, Iraq, these are kind of the key names. The other thing you can quite clearly see here is these are all negatives, i.e. downward adjustments, cutting production, except for one, Iran. Obviously, that was a bit of a sticking point, but there's been a bit of, I would say, a compromise on the Saudi side, softening their stance, with Iran freezing production just shy of 3.8 million, which is actually marginally higher than what they're producing at the moment. So the Saudis are cutting and they're giving some leniency to Iran. This is why you've kind of had this quite bullish reaction in the market, and we've managed to really hold on to a bulk of the gain. We've kind of got to 50 psychologically and then had a bit of a pullback. Looking on a going back to the chart though, looking at longer time frame, I'm going to have to put Piers on the spot. He's now opened up a new beer and pizza deal with Vass on where are we going to go to first, 55 or 45. And bearing in mind the price wasn't quite as high as it was at the moment, but Piers is saying we're going to print 55 before 45. And so just looking here technically on a longer, this is a weekly continuation. Obviously on the upside is 52 is kind of critical technically. That's kind of the highs from the summer and October, I think it was, that double top. But we can see how it starts to open up some clean air. I think Goldman Sachs were talking about a move now back to $60 if we get above these more closer levels here, given what's happened as well. Obviously though, much like Trump, there's a bit of an implementation risk, I would say, nervousness on them actually getting this done. The other thing that, if we do start to get up to $55, $60, although that might be a bit of a top, one thing is the FT are talking about this morning is an upshot for shale. If you ultimately think about, go back to the chart here, why was it that the Middle Eastern names forced this price lower? Obviously this is to their detriment if you're thinking about a lot of these companies and fiscally them balancing their books. A lower price is a net negative. But what were they trying to achieve? Of course this was trying to regain control, if you like, of the market and squeeze out what was becoming more of a prominent theme, which was US production. But what the FT are talking about is that the agreement will lend a hand to shale oil producers in the US. So with forward prices of WTI, what we are looking at moving towards $50, a level of which some wells can break even in basins including the Permian in Texas, Colorado, Oklahoma, according to some analysts. One thing is for certain, they say US tight oil will like the price rise and production will soon start rising. So US output might be something to keep an eye on if these prices start to creep higher. Will that then negate a cap to upside price activity once we get up? Probably, I'd say, more towards the realm of the $60 handle. So that was kind of, obviously oil was the big deal yesterday, but there was read across into some of the other assets. So I'm just going to hand over to Will, who's with me, and he's going to talk you through that. So over to you.
Okay, thanks very much, Anthony. Hello, everybody. Yeah, absolutely an interesting day in oil, and certainly in oil, one of those days where really the trend consistent from the get-go, right from the market open, higher. And I'll leave Anthony obviously to talk a bit more about oil. What I'd like to talk more about is actually the US dollar and the moves that we saw in the US dollar in response to this push in oil. And here's the euro dollar yesterday, moving from around 1.076 all the way down to 1.055. You also had the same across currencies, really. If you look at how the yen moved yesterday, strong move lower in the yen against the dollar. General dollar strength across the board. That obviously then impacted commodities other than gold that are impacted by the US dollar. Here, as the example, oil has bounced a bit today. If I go to, where's yesterday? Here, this is gold, yesterday, breaking through the pivot level, breaking through S1, getting all the way down to S2. This is quite a significant move in gold, especially when oil was moving higher. So what's happening here? Well, so you've got the dollar higher, things like gold lower. If we have a look at T-notes, they were really leading the march. Look at US Treasury bonds moving lower as well. So it's interesting for you guys to think about how these moves impact other asset classes. And this was clearly one of dollar strength. Let me just transition my chart for you here and talk about US debt being hit by rate expectations and now oil's rebounds. Well, the white line here, this is US Treasury prices, not yield prices. And the blue line here is the oil price. And what we've seen since the US election, and now especially since OPEC's decision, is the correlation between the oil price moving higher and weight coming into treasury bonds at the same time as the odds on the rate hike moving higher as well. So it's the odds moving higher for rate hike, the price of oil moving higher, weighing on US treasuries, and at the same time supporting the US dollar. So why does this happen? Well, think about the inflationary impacts that a higher oil price has on Western economies. Really, the cost of energy is a foundation of any type of economy and any type of industry, and it's been the low price of oil that has allowed central banks to adhere to their ultra-loose monetary policy. That has been a key factor. So if that low price of oil is going to now be transitory, then of course you have to think about how are central banks going to respond, and the US being obviously the most important central bank. So it's been the strengthening dollar story on the back of oil that was the other trade, and that's what I was actually trying to do yesterday. I wasn't able to get hold on the oil trade as I would have liked. I know some of you did, and you did that very well, so well done. The trade I was then looking for was more of a dollar strength trade, following the trend in T-notes moving lower and the trend in the US dollar moving higher. I was trying to execute my short gold trades yesterday, and I was getting short on the break of S1 here. But unfortunately for me yesterday, I mistimed those entries twice, and then actually did miss that push lower. But hopefully that's a good, just show you on the chart. So here's gold just on S1 here. Unfortunately this time, that in terms of the entry, you can see we had the push back higher, back towards the pivot. We came down to test S1 again, a bit of noise before finally breaking lower. But hopefully for you guys, that shows you, how these assets are correlated, and hopefully you can start thinking about that. If this is, you all know, we've taught you about how the US dollar has an inverse relationship with the price of oil. When the US dollar moves higher, it can be that oil moves lower. Well, hopefully you find it interesting looking at it this way, where actually the price of oil moving higher on this occasion has had a positive correlation with the US dollar. Does that make sense? Normally with you guys, because oil is priced in dollars, we talk about an inverse correlation between the US dollar and the price of oil. But here, looking at oil today, and given what's happened in T-notes, actually that's now been a positive correlation because of expectations of inflation and rate hikes. So staying, if you like, staying on your toes in terms of how these assets are being correlated, and trying to, hopefully you guys can understand these correlations here. Oil higher, meaning the dollar moving higher, and things like gold and the euro dollar moving lower. And look out for a continuation of those type of correlations today. Okay, thanks very much, Anthony. I'll pass back to you now. Hope you guys all have a good day. Thank you.
Cool. Thank you, Will. Just quickly wrapping up then, I won't take too much more of your time. The session's underway. But just taking a quick look at some other things that have occurred overnight, just to get you up to speed. There has been a couple of data points that you should be aware of at least. Let me just go back to my other charts. So you've had some Chinese data overnight. I'll give you the general context of that. The Chinese manufacturing PMI 51.7, above the expected 51. That was the highest reading, in fact, since July 2014. Non-manufacturing in China, the highest level since June 2014, 54.7 against, there was no expectation for the service number. The previous was 54, so an improvement. The Caixin manufacturing number was broadly in line with expectations. So some relatively positive data coming out of China overnight. A bit of volatility at the open initially in terms of the DAX. Obviously it dipped, but it's recovered already. This is kind of the new norm, I guess, with the DAX. We tend to see that around this early first half an hour of trade. I guess there's something to monitor going through the session today and tomorrow still, is any kind of breaking developments. Now let's say OPEC is behind us for the time being. We're still going to be monitoring oil and any associated feed through in comments, but obviously the Italian referendum is kind of the next big event looming very shortly. This is on Sunday, so any polls that come out, any rumours about Renzi's political future. We had some things about early reports yesterday talking about that he may resign even if he wins the referendum, although that did get denied by the Italian government. So definitely a couple of things you need to remain sharp on in regard to listening to the Squawk and keeping an eye on the headline feed. The other thing as well, just looking at the S&P here, yesterday we did manage to squeak a fresh all-time high. That's now up at 13 3/4, but I still think very much so we're confined to that previous record. Well, this was the old all-time high here. I've got marked up that kind of double top, that eventual break that we had more recently. But certainly I think that 91.50, a big level of support on the downside. And this is kind of now fairly tight price action. I guess the market, equity-wise, is still awaiting some of these big events. Obviously, they come in fast succession. You've got payrolls Friday. You've got Italian referendum Sunday. You've got ECB decision, press conference, QE extension possibly next Thursday. Then you've got the Fed also on the 14th of December. So you're not short of big events coming up, and maybe some of the bigger real money sitting on the sidelines to see how some of that plays out. But going back on point in towards today's session, a couple of things you've got to be aware of. You've had the manufacturing PMIs coming out of Europe this morning, but please keep in mind that these are final readings, hence if there's been a minimal reaction, that will be why. But later, initial jobless claims, this is too late now to be counted into the survey period of non-farm payrolls. But certainly yesterday, you had some pretty decent GDP numbers coming out of the US, followed up with this very, very strong Chicago PMI. ADP was better, but a down revision to the previous. But data-wise, we're looking pretty firm, hence the reason we're priced at near on 100% for the December hike from the Fed. So the jobless, I don't think is really too much to be considered, neither the manufacturing PMI, because in the US, the way the manufacturing PMIs are structured, the ISM reading takes priority, and that's going to be at 3 o'clock, so I would be keeping a close eye out for that. And also the employment constituent, which will make up part of the forecasting for non-farms, obviously we'll get tomorrow. Fed speakers, well, there's quite a few today actually. You've got Kaplan, Dudley, Mester, Powell. 3 of the 4 are voting members of the Fed. Now, you're not looking for them to comment specifically on December. They probably will, but that's a bit of a no-brainer at this point. What we're interested to hear is what do they think about after the hike. The communication of the rate trajectory of 2017 is what's critical for the market, managing of expectations and therefore asset prices. So that's your day and how it's structured. I thought I'd finish on a bit of doom and gloom, but ultimately it's what you guys voted for. This was an amplified poll we did yesterday. Obviously there was OPEC going on, so the actual vote numbers are pretty low, but nonetheless, it's not looking too good for Renzi. You guys, I asked you yesterday, will Italian PM Renzi survive the referendum vote this weekend? 73% of you said no. So good luck, Matteo. But yeah, we'll finish with that. Have a good session. We'll be in the chat as per normal. So I'll see you there. Thank you.